already up 8,500.
Nice.
I'll be showing you my simple entry that I take every single day trading forex. So let's go straight to the video.
17, I wanted everything that was in store. At 23, I bought it all.
So we are here at the chart. The first thing I always like to look for is the trend. So let me show you how to know a trend. So for me to consider a trend, I need to go to the bigger time frame, like the daily time frame first. And as you can see from daily time frame, market is obviously bearish, meaning that we are breaking structure to the downside. All right, then I need to reconfirm from weekly time frame. I also see that weekly time frame is bearish, and then we look at 4 hours. Now 4 hours is where I usually make my decision to see what is going on, where to expect market to get to before I will not take my entry. And then after considering that, okay, 4 hours is also bearish, now the next thing we need to look at is my chart pattern. So what chart pattern do I use, which I call my strategy? I use this strategy, the smart money concept. So let me show you what to see in order for me to take a trade. Now the first thing I need to see, let's assume that I'm looking to take my entry somewhere here, right? According to bigger time frame, here is where I'm paying attention to get my entry. The first thing I need to see is I need to see a market buy into that zone. All right, number one. Then I need to see a break, which is 2, a break of that low that led to this high, 2, a pullback, 3, and a break of that low that led to that pullback, 4, and then my entering 5 before the continuation. All right, so it's not that hard, but as time goes on, you will understand it in the chart. So in order for me to take an entry, I need to see a break 1 and another break of structure, that is 2, and by so doing this becomes our structural liquidity. All right, structural liquidity right here. Then after structural liquidity, we will now get an entry. So this is where I take my entry right here, targeting this low and covering this high. That is pattern number 1. And the second chart pattern is this. So let's say I'm expecting to take my entry somewhere here. I need to see market buy into that zone. So we have our buy, then we have a breakup structure, but this time around, instead of having double breakup structure, we now have something like a slight consolidation, and then we have another break, then price now comes back, and then we continue to the downside. So these are the 2 chart patterns I always look at for in the market. All right, now let's go back to the chart so I can show you this pattern. Now the first thing, like I said, we need to look at is where am I paying attention to get my entry. So as you can see, obviously this market is bearish and is selling massively. So I wouldn't expect price to come all the way up here in order to get my entry. I need to focus on the present. So what is going on the present? Now I can obviously see that, okay, we had one break right here. So we had one break and we don't have our second break. That's number 1. We don't have a second break, meaning that whenever we don't have a second break, that high that led to this low will be taken out as liquidity. But this is, if you want me to break this down for you, I will make another video for it. All right, so knowing fully well that, okay, because we don't have 2 breaks and also we don't have the other pattern that I showed you earlier, that means that this high has to go, and also it's a good sign to show you that the market is planning a reversal pattern, meaning that market is planning to buy to the upside. So now what did I do? As we can see that I already know that okay, since we don't have double break my other chart pattern, I know that this high will be going. So when market get to this high, what do? I go down to the lower time frame, like 30 minutes time frame. So this is where I'm expecting price to get to. Now price got to this zone. What did I say? The first thing we need to see a break of that low that led to that high, which is what we have here. This is one, a break. Now we saw this slice consolidation right here, which I mentioned, which is that second pattern, and we had, after we had our consolidation, we had a break, another break, guys, two. Now what does that tell me? It means that okay, now we have a structural liquidity, meaning that this high right here is protected. So if we don't have a structural liquidity, we expect this high to be taken out. But if we have a structural liquidity, that is when we now expect this high to hold. So when I saw this, I know okay, now we have a structural liquidity. Where are the possible zones for price to pull back to for me to look for an entry? This is where going further lower, like 3 minutes, becomes necessary, which is our number 3 step. Step 3 is confirmation. So now, how do we get confirmation? Now, after you have gotten your structural liquidity, you go down like 3 minutes, and now you need to see where are the possible zones for price to get to. We have a clear fair value gap right here, and we have this other block right here. So in my mind, out of experience, I already know that okay, we have anticipation of price coming for this high. So what eventually happened, we have price pull back to that zone. So it's really interesting. Now when price get to this zone as well, I don't just click sell. I also go further, like 1 minute 1 minute time frame, and then I want to see a shift in market structure. What does it mean? It means that as price is going up, alright, this is bullish. On the lower time frame, before you start selling, it has to like shift back to bearish, like selling, right? You have to see the shift in market structure, because if you sell from here and then market keep doing this, you might end up losing money. So you need like full confirmation. As you can see from here, you can see that okay, this is the low that led to this high, and now we took out that low, pull back. That was when I start considering taking this trade. So this is my simple 4-3 strategy, and before 4 steps of getting an entry. You can see, alright, we already hit TP on this one right here. Let me close my other positions. Okay, so here 2 of my positions have been closed, and in the remaining one, so that one was my first entry right there. So that was my first entry, and I'm going to allow it to run because I'm seeing like a high potential to the downside. I don't want to risk everything, so I have to like take some profit from the one I already taken, which is 1 to 4, and then I have to let the remaining one run to profit. So here is my last tip for you. My last step is keep a reminder. So this is very important. When you are trading, you are more likely to forget that money is real. So sometimes you see a number on the screen, like you don't consider it real, and you're most likely to get greedy and then end up losing everything at the end of the day. So what I do is that as long as I have up to $50 in my, let's say I have of profit on $200, I'm breaking even. Alright, you break even to secure your account. So even if market pull back against you, you'll still be on profit. So it doesn't affect your account. So this is very, very important. And that will be it for this video. If you have any question, leave it on the comment section. And if you like this video like this, and if you want me to be making more videos like this, please give me a follow, subscribe to this channel, and stay tuned, because next week I'll be dropping a video about structural liquidity. I know I'm a little bit hurried, but I'll break everything down one after the other because I can't cover everything in one video. So see you soon.